Hello and welcome. My name is Kelly Raymond, and I'm a Forex trader. No, seriously. Just before I start showing you strategies, I want you to know a little bit about me. So let me talk about myself for a minute. I'm a computer analyst and a programmer. Yeah, I worked in the programming field for a couple of years, then I ended up starting my own company. But then I found trading. Okay, I first got introduced into trading in 2009 by a friend called Frank. He made me open a bank account and a trading account, and we we started trading. I learned a bit from him, taught me about indicators and how we use them to trade. But I didn't know much about foreign exchange or spot FX, as most people would like to call it. But it was an opportunity for me to learn. I like to learn. Anything I can learn, I'll learn and I'll pay attention. I was able to spin that $100 account to about 700. Call that beginner's luck, right? So that's how I came about trading Forex. So in 2009, I funded my first trading account with $100 just to play with it. So I ran an account for a couple of months. And for some reason, I think I was carried away because I got to work. So I stopped trading and withdrew my money. 2016, I tried with a demo account, just to refresh myself. And as soon as I felt I was ready to trade real account, I funded a live account. And well, first week, I started doing great. But the truth is, I didn't have a strategy. No, I didn't know much about trading anyway. So I just looked at the chart. If it is going down, I sell. If I see candles, loading up, I buy. I didn't even know about time frames or anything like that. I didn't even know anything about money management. So all I do was just 0.10 lot. Before I started losing, I made a lot of money. In a week, I was about 7,000. Yeah, don't tell my wife. I was about 7,000 up, and I started staking more, putting more risk on it, and I think in less than a week, I lost it all. I didn't know, anything about news or fundamentals. I just knew if you look at the chart, it's going up, you buy. My losses between 2016 up until 2018 helped me learn about the markets, right? Each time I didn't have money to deposit into my account, I was busy learning about stuff that I didn't know. At some point, I even paid some dude a bunch of money, I won't mention names, to learn Forex. And well, it taught me a whole bunch of stuff and that are valuable. If I think about it now, they were really valuable. You couldn't pay $1 million to learn those things. So 2019, I realized that I had lost a lot of money, but at this point, I had started making money because I already knew what I was supposed to know before, venturing into trading. I already know a couple of things. I already know about, what moves the market, fundamentals, macroeconomics, and all that. And coming from a background of computer analysis, it was quite easy for me to analyze situations, and that's how I became grounded in Forex. And I realized some stuff that most people overlook. They don't see it because they don't know what to look for. And I also realized there's a lot of misinformation in the Forex market. People teach you all kinds of stuff, but half those things they teach you aren't really correct. And I'm here to prove that. I'm here to teach you about things you probably didn't know, about indicators and price action. Have you heard anything about buying the dip? I'll show you that today. I want to show you a strategy that could make you money. It will get you into the market way before everyone else gets into the market. Well, probably a bit after the smart money get into the market. And contrary to general belief that indicators don't work, You will be surprised. Indicators will show you when to get in and when to get out. Right now, I'm going to show you one simple strategy that would get you into long positions only. I'm going to teach you that one right now, and I hope you stay tuned. Okay, let's begin. You open your MetaTrader software, and you open the currency. Well, you already know that. I'm looking to take a buy, and first thing you would do is to add your your alligator indicator. I think it's a Bill Williams indicator, so you will add them, but you will change the parameters. Now naturally you have the jaw set as 13, then shift 8, period 8, then shift 5, lips 5, then shift at 3, right? But mine, I have it set at the period, jaws period is 10, shift is 4, teeth is 4, shift is 3 for the teeth, then the lips and the shift is 1, but the period is 3, and the method is smooth, and you apply it to medium price, which is high low divided by 2. For the sake of it, let me zoom in and show you all how it is done. Naturally you would have the blue line, which is let me be sure what I'm talking about, and which is the jaw line, right? It is the jaw line. I don't even use the jaw line. If you use the jaw line the way I wanted you to take this indicator, you would get into a lot of drawdowns and a lot of fake entries. I would know when your trade is going long about 2-3 hours before most people would, and I'll be able to get in on time. Right, so that is what I want to show you now. Now what I normally do is I'll put the alligator, I'll mute the jawline, right, by selecting none, so it doesn't show, because I don't need it. I'll just select, none. I don't want it to be seen on my chart. I only need the teeth and the lips. I'll create my own jaw. So let me show you how to create your own jaw. You come here and you slap a moving average right on it. Your moving average has to be 20, no shift, simple, and it must apply to close. I use blue because I'm using it to replace the jaw line, right? Now, what do you see here? Virtually nothing, because it doesn't look like anything. But if you look closely enough, you would see whenever there's a dip, trust me, the big guys, the big guns, the big banks prefer to buy low and sell high. And how do you know when they're about to get into the market or when they are signaled a buy? Well, this is how I get to know it. Big companies have enough money to keep running these trades right around you, and you would never see it coming. But how do you get into those trades, those profitable trades, early enough before the market even, or before most retail traders are aware there's a big move? Well, this is how I do it. Now, I look for dips, right? Where there was a lot of sales and the market decides to come back up for buys. That is when I take my trades. Now, let me go back as far as, I don't know, March, middle of March. Yeah. Okay, let me look for when the market dips. Okay, let me start with this. Now, how I take my entries is simple. Very simple. I just wait for my moving average, which is my jaw, to cross the lips. Again, what is the lips? I think the red line. Oh, let me be sure. Let me confirm, because I don't talk about much of this smack. I just look for trades, get into it, to make my money, get out. Sorry, it's teeth. It's actually teeth. So I was wrong down there. I don't know much about the lingo. I don't know the technical stuff. I program indicators, I program robots, But yeah, so what I do is I wait for the markets to come down. I wait to ensure that the red has crossed the green long ago, and that the blue is coming to interrupt the party. Yeah, I want to see the blue, which is my moving average, 20 moving average, cross the teeth of the alligator. Simple as that. That's all I have to see in something like this move down, right? I need to see this move, this kind of move. This is like buying in the valley, right? But really, you wouldn't know that the market is going to go back up, so you wouldn't see this coming. But I see it coming, and each and every time I see it coming, I prepare to take position. In this case, I'm taking a buy, right? When I wait for this blue line, this 20 moving average, to cross the teeth of the indicator, I buy on the next candle. It crossed right around here, so I buy on this candle. I took a buy at the beginning of this candle, which has already gotten crossed. 20 moving average is crossed over, and naturally you should expect a bit of drawdowns. So I expected a tiny bit of drawdowns. I will show you how to set your stop loss, but look at it. Boom. Look at that. Nice. Now, you wouldn't take trades when there is no dip. Okay, I think I made a mistake when I was telling you how to enter the market. Now, look at this. I'm not saying it's going to be 100%, but I'm going to say it's going to get you into trades quite early before any other indicator gets you in. And I'm going to show you why that is. But chances are you will lose more when you take when the previous high is not up to 100 pip from the first cross. Yeah, you stand a higher chance of losing. But when it is, you stand a greater chance of winning. Now look at this right here. You kind of cross right around here, and you get your entry right around here. Not much, because you get slammed into drawdowns. I don't know what the ATR for that moment is, but it's going to be you're just going to hit your stop loss. So, but the truth is, you could do better. You could do much better, because look here, at this point it crosses slightly below both the green and the red. Then the blue came in and crashed the party. You take an entry, small, little, just very, very, very little drawdown. Then you get over 400 pips, roughly around 400 pips. 400 pips. If you want to step out right around when the candle crosses, when the two crosses, you would have secured about roughly 314 pips. That's not bad. That's not bad at all. How do you set your stop loss? Use the ATR. I use the ATR to measure where I'm going to put my stop loss. I don't just put stop loss. My stop loss is a kind of dynamic. I use 1.8 times of my ATR. Actually, I would have used 2, but I'm conservative, and I just set my stop loss and lot size is based on that. I only want to risk 0.5% of my equity per trade. If you really like this video, hit the subscribe button and like.